I've learned that the best founders are always selling.
Welcome to the GTM Vault podcast, hosted by Rick Koleta. We uncover the strategies, the pivots, and the breakthroughs, turning startups into giants. Let's crack, open the vault, and find out how.
Welcome back to GTM Vault, the show where founders and revenue leaders decode how the fastest growing companies go to market. Today's guest has spent the last 2 decades helping entrepreneurs become the CEOs their companies need. Vijay Rajendran is a venture builder, executive coach, and the author of the Funding Framework, which debuted as the #1 new release in venture capital on Amazon. He's led portfolio value at 500 global, helped founders raise capital in over 80 countries, and now coaches high-growth leaders on how to fundraise with confidence, lead with clarity, and scale without burning out. In this episode, we unpack how founders can align their pitch, energy, and execution to build a fundable business and grow into a resilient CEO in the process. Vijay, you've supported hundreds of founders on their path to becoming CEOs. What consistently separates the ones who make that leap from the ones who stall out? You know what I see a lot? Companies with solid strategy, but terrible execution. They've got dashboards, reports, tools everywhere, but no one knows what to actually do next to scale their business. That's why I've been paying attention to what ZoomInfo is doing. They're not just a contact data company anymore. They built a full system of execution. They're calling it GTM Intelligence, and it actually works the list, writes the outreach, and triggers the play. No guesswork, no manual grind, just pipeline moving, predictable growth, strategy that actually delivers. Check it out at zoominfo.com.
Rick, thanks again for having me on. This is such a treat. I think that's an excellent question. There are a set of differences between people who can graduate from founder of a startup or leader of a small team to a chief executive officer of a company. And it comes down to, can you scale yourself? And what that looks like is replacing a lot of hustle, a lot of iteration, and a lot of intuition that is driving some of the things you do to intentional, strategic, thoughtful leadership. That is really hard for people to do, particularly since they've been asked to run a set of sprints really, really fast to then pacing themselves over a marathon. Like, that is a very different sport. But that's a lot of what it feels like in terms of understanding, I'm here, I want to get there, we've got a lot more to go. This is what I need over the duration of longer exercises. And whether it's going from thinking about, hey, we've got to do X, Y, and Z in the next 60 or 90 days, or else we are default dead, to I've got to write an annual plan and fix a budget to it that we will actually follow over 12 months. And I need to communicate a vision for the next 24 to 36 months to investors. That actually is materially a different set of skills and elements that people need to stick with in order to be that type of more strategic.
Coaching isn't advising. What's different about how you help founders grow?
Coaching is on a spectrum, you might say. Much earlier in my career, I spent some time as a consultant. A consultant comes to you having done the work for you and giving you the answer. And as a coach, I'm not trying to give you the answer. We're trying to find your answer. If the answers were so easily findable, you won't be struggling with some of these things. And so I think what coaching can do is it can help people figure out their answer, come up with something that's authentic. I know we use that word a lot nowadays, but something that means is genuine and specific to them. And that's what we're really trying to do, is do that work together, as opposed to an advisor saying, I think you should do X. Right? We need to make sure that you're successful, and that means coming up with a solution together, exploring truly what that looks like.
I can relate. I remember about 10 years ago when I started Creator Den, which was a VC-backed influencer marketing platform. The VCs were all like advisors. I wish I had a coach that kind of guided me through the process. Whereas, the board members were looking out for their own, right? At the end of the day, they want to see you succeed, sure, but they want to see themselves succeed first.
Yeah, that's very true. And I think the benefit of a coach is focused on you. Like they are really attuned to your needs. And when I say you, I mean you as an individual. So there are things that you need to do for your own like well-being, for the things that you value. At the end of the day, something that many of us don't realize until it's way too late is people value fundamentally different things. And you gave a great example in terms of your board cares about different things than you do. But even between co-founders and people who join your company, they may have all joined or be doing what they do for very different reasons and different motivations. And that's often laid bare, but not always something that people realize until much too late in their experience starting and leading a business.
What's the biggest mindset shift you see when a founder goes from fighting fires to leading with intention?
It is okay to be a little bit reactive in your problem solving upfront because things that you didn't know you're going to have to do show up and you have to deal with them. So the biggest thing with strategic or types of leadership, and when you go to more intentional leadership, is that you start asking yourself what's important and not urgent. And you spend more and more of your time, hopefully, on things that are important, not urgent, as opposed to things that are just and urgent. And that isn't something that happens overnight. It's not like you got your Series A and then like you suddenly make that jump. This is actually, again, something you train for. And it's just like you don't go from running sprints to being a gold medalist or a champion marathoner. There's a different set of things you try on in order to get better at managing yourself, your time, your calendar, and things of that nature. Now, while you're doing that, you ask yourself, well, what is important? And that's where, again, a coach can be helpful or someone in your life who you can work with is helpful in terms of explicitly underlying your core values, because those core values give you a long-term vision. That long-term vision helps you know what's important, not urgent, or important, urgent, that require your time and need to be an investment of your very scarce time resource.
I remember being so emotional. Like I was in my mid 20s at the time, founder. I was like influencer marketing, creating this new category. A lot of people doubted that it would be like scalable as an ad format. So you have this mindset of like, am I going to make it? I don't know. You're constantly trying to reassure yourself that it's going to work out. So as a result, and you're thinking things through, like everything, repeating it in your head. And as a result, I feel like it makes you so emotional and perhaps reactive. And that's where having a coach, I feel like, would have helped so much.
Yeah, you're right. The reactive nature of things does put you in a fight or flight mode, and you need that to survive. We've all, at some point in our experiences as humans, needed that because that's a survival instinct. That's really great because that's what got you here. But what's going to get you there is a different part of your brain that you want to try and activate more and more, and it's really hard.
In the funding framework, you lay out a practical approach to fundraising. What's the first thing you want every founder to internalize before they start raising?
Yeah, I think the first thing is that fundraising, like sales, like hiring, is something people can get better at. It's a learned skill. So what does that require? It requires people to understand that you're trying to build lasting relationships with investors. Because like you said, that person is going to play a big role in your life, either as a board member or someone who will reinvest or communicate things favorable or unfavorable about you in the future, and so on. And so you've got to find people who share your vision. They're bought into what you're trying to do and they can contribute something beyond capital. So I think that's like the first thing to internalize is you're trying to look for partners in some respect on this journey, as opposed to just folks that are going to deploy capital. And after the TechCrunch headline comes out, you're not going to hear from them again.
Yeah, that's a good point. And I want to say, like, now that I'm in my mid 30s, I feel like I can think things through a lot more clearly than I could when I was in my teens. Whereas I was still in the process of learning and figuring myself out for the most part. That must be challenging, like based on where you're at in your life, what you've accomplished. So do you have like a technique when working with, say, younger founders compared to older founders?
It's a great question. I do see differences between younger and older founders. I think that the younger founders have remarkable energy, and there's a certain like lore we have about founders who have, let's say, dropped out or left some type of path in order to go build something remarkable. That what they need is, I think, structure. And so putting structure around what they want to do really helps, because they've been successful just because of like unbridled energy, right? So channeling that to oversimplify is really important. Alternatively, you have far more at times experienced founders and entrepreneurs. What they're looking for from a coach is very different. I've noticed like repeat founders come to me saying, I'm interested in doing X because it can be my legacy. I'm interested in doing something because I have a very specific vision and a set of goals that is tied to something I deeply want to exist in the world, and because it is linked to my values. So that doesn't mean that the younger person doesn't have a vision or doesn't care or doesn't have values. They're just not articulated very well yet. And so in the first case, you're trying to create intentional, purposeful leadership. In the second case, you're trying to take that intentional, purposeful leadership and be the sounding board that the later stage founder wishes they had, 2 or 3 startups earlier, but didn't know how to access. And so the role is a little bit different. So, I've noticed that among a few other differences between younger and older founders with whom I've worked.
How has the VC environment changed in 2025? What haven't founders adapted to yet?
The VC environment has changed in a lot of areas. Basically, over the last 18 months, we've seen many more secondary transactions than I think we've observed before, between funds selling, founders selling. We've seen the fact that, some IPOs have come out, and that's positive, despite all the volatility and uncertainty in markets. And so that's making some people feel optimistic. But generally speaking, the biggest difference that I'm observing, and this has some Silicon Valley sort of bias, is of course that the things that people thought they needed to do to be successful no longer are the high watermarks or metrics that maybe they need to get funded today. What do I mean by that? A few years ago, if you had a couple $100,000 in ARR, if you're a SaaS company, then you were fundable at seed, maybe $1 million at Series A and so forth. Everything in a higher interest environment became, somewhere like 3 to 4 times that number. So that means if you want to go public, maybe you need to have $500 million or $1 billion of revenue, right? Everything has shifted tremendously from, let's say, the bubble of 2021. What that also means is that today, with a set of companies that are achieving a lot of growth with very few employees, using no code, low code, and AI, are redefining what it means to be funded and achieving those benchmarks. So things move dramatically because of the shift in interest rates, and then again because of what's possible with AI and very few employees. And I think it doesn't stop there. I think using different teams that are offshore, remote, whatever, different styles of working, being a very lean type of company, has opened the lens to different types of business models. And if you are managing and building a company 24, then you have to reset a whole number of things. And that is very hard because you done perhaps a lot of things right to get to this stage. But now what it looks like to be funded is, of course, a lot more done with a lot little, to put it in a nutshell.
Definitely. Companies are moving so much faster nowadays. More companies are realizing that they either adapt to this, kind of fast moving motion, this environment where you need to just break things and move fast and fix them later on, or you just can't compete anymore in today's day and age because everyone's moving fast.
Yeah, everyone's moving really, really fast. I think that that's a thing that then investors are looking for is just like, are you moving at this lightning pace? Something I have been exploring lately is how our previous notions of product market fit have changed. This is a thing that I think is going to be more pronounced as we continue through 2025, is that investors who used to think, okay, you build this thing, you get to product market fit based on whatever that looks like, and you then celebrate, and the whole psychology of the company and your attention as founder shifts from build to sell. And that's not the case if everyone else is moving really fast and the cost of replication or imitation by others is going to be like really, really low because they're going to catch up or exceed what you can accomplish. So sometimes signs of product market fit can be a false positive in the sense that they could lead you to sort of take your foot off the accelerator when it comes to, the pace of product development. It turns out you just got to stay in product market iteration for a long, long time, because the chances are someone else comes out with another amazing model or another, excellent tool or a new category is discovered and it grows in the time that you're sticking to a plan that made sense, 4 or 5 months ago. So yeah, I think that is another big difference in 2025. And I think like some investors are realizing, the rate of change and the shift of like a product market fit to now this like continuous experience and continuous effort is going to be a big difference in how we build, lead, and invest in the future.
Absolutely. Things have shifted drastically, right? One thing I want to explore here is in a world where anyone can build product, finding PMF is so trivial, isn't it? In addition to that, it seems as though building an audience and engaging them throughout this journey has become even more important nowadays than ever, considering anyone can build up the same product in a very short time.
Yeah, you're right. I think people are continuously trying to iterate and develop their product as the market itself changes. So if the market is moving target and then just like a singular product development strategy or singular product marketing effort is not going to nail it, you're probably going to iterate that very thing a number of times and kind of stay with your foot on the accelerator. And so I think that's going to be a big difference now for startups.
One of the things you talk about that I full-heartedly agree with is that you say that confidence comes from clarity.
Yeah.
What are the 3 things a founder must be clear on before they step into the room?
Yeah, the thing that we think we're going to do is we're going to feel confident when we have raised some money or we've closed a big sale or we ship a product. And it turns out like it's not conditional on those things. It's just from like knowing you walk into the room, understanding this is why I'm building this business. Here's why it matters to the world. And here's why now is the time. They're like, and articulating why now. And this is our moment. And that is like very important before you start talking about features and benefits for a customer to hear, or before you start describing the investor and their thesis match with your company. And it's important to be able to say that before you bring on somebody who's going to take some career risk and personally invest their time and energy and talent in your business if they're a hire.
What makes a pitch truly resonate with investors today? What's missing from most decks?
I think there's an underemphasis still today on team, because when you ask founders like, why did you invest? They felt the team was exceptional and that they were able to not just have a really perfect deck, but they told a story that that resonates, and they were like really memorable. And part of what made it memorable is that this is the best team in the world to go out and execute this thing. And so people will bet on the jockey before they can even see the horse. For it's obvious that this is a market that can exist in the future. They just know that this founder is going to run through walls, and this team is exceptional. And that's very true at the earlier stages. Later on, when there's more validated about the size and growth rate of the market, then it becomes like clear that the horse is so important and the market is there. But what I tell every founder is that they can describe the story, and that's the first part of the funding framework in the sense of, this is something that's happening, and the world is going to be different, and we're the best people to make that real.
A lot of founders separate their GTM motion from their fundraising strategy. Why is that a mistake?
Your GTM motion has to help you hit certain thresholds and get certain results that make you default investable. So I ask people, like, at the next stage to be investable, what do you need to have accomplished? You need to be and some people will have an idea based on things they can infer. Oh, we need to be at this level of sales, or I think we need to have released our beta product or something like that. But in fact, if you have a GTM motion that is never going to catch up, then you're going to be behind and you're not default investable. So that's why the GTM motion matters for investors. And your fundraising strategy is, hey, I'm going to raise money for the next 18 to 24 months. And that's going to allow our go-to-market motion to be successful and allow us to reach what we said we're going to do today, and to have a really great story of explosive growth and be able to even exceed expectations, so that we are able to work with our pick of investors and raise the money that we need at the next stage.
You built and run venture studios. What early signals tell you a company is fundable and repeatable?
So with a venture studio or a venture builder, for folks that may not be familiar, it's essentially a company or a startup even that builds other startups. And in those cases, you're trying to approach it from two directions, either thesis or founder-led. And what tells you that you got something that might be working is that there is just very high founder market fit and founder channel fit specifically. And so there are three or four different ways you could distinguish yourself. It could be data, design, development, or distribution. I think that last one, distribution, matters a lot right now. And so I'm really looking for some kind of pipeline that tells me this stands out from what we thought was possible. And that pipeline indication says yes, there should be more support or investment or something like that.
What advice do you have for founders raising outside major hubs like SF or New York City?
Yeah, it's very hard considering, you look at the data and it says, the majority of funding, let's say in the US, is within one of these two hubs, SF or New York. And I think there are a couple approaches. One is to start spending more time in one of those areas, and particularly with the investors with whom there is a lot of, let's say, vertical or sector focus, and they understand maybe it's in fintech or in climate or something else, that there are going to be products built in these other places that are close to customers, or take advantage of university or large research institutions, talent and proximity. So when you have the ability to spend time there and network with those investors, then you start getting access, even if you're not based there. There are, however, groups of angels and sometimes regional or local investors who are extremely helpful and want to see you succeed there. And so if you're very early in your journey, don't overlook those folks and what they can do. They may need more education or more time building the relationship, as I like to think about, and as we've talked about already, in order to perhaps get there if maybe they're not familiar with your space. But there are sophisticated investors everywhere there are also unsophisticated investors everywhere. So again, building a trust-based relationship with those individuals early on so they see your progress is where you develop a local foundation, perhaps before you are ready to raise money in some of these other major hubs.
I get this question from founders all the time that live abroad, say in Turkey or India or some part of the world where there isn't as much VC money or as much innovation going on. And I just tell them, reach out to people, just send them cold emails, right? Like one of the things I noticed in the Bay Area was people are really open to mentorship. You know, a lot of people have come there with nothing and have gotten really successful. So I think naturally they want to just kind of help the next generation to do things and to figure it out and through sharing their wisdom. So one of the things I used to do is just reach out to 10 CMOs every week saying, hey, I'm new to this city. I'm trying to learn. I'm trying to figure things out. Do you have, 15, 20 minutes to grab a coffee? At the time, I used to meet them at the LinkedIn in downtown.
Yeah.
Their open coffee shop. Maybe you've met some founders there yourself over the years.
Yeah. There are various ways to do this. First of all, a warm introduction is always going to get a higher open rate and a higher response rate, right? So I don't want to discount that. But I think what you pointed out was not, hey, I'm Rick, I'm new in time, and I need something from you. It's like, I really appreciate that you've accomplished X, or that you wrote Y, or that, you and I share Z in common, right? You're asking to develop a relationship with that person as opposed to just extracting something from them. And if you reduce the friction then to meetings saying like, hey, I'm also downtown, let's get coffee at this location. You again make it easy to say yes. Simple concept, seldomly implemented. And then thirdly, I think the other thing is, and this is for people who are not necessarily based here, is create like some model of scarcity, which is I'm in town for this conference, or I'm going to be here next week, or something like that. You're somebody I really wanted to connect with while I'm here. And here's why. And again, referencing the things you either have in common or respect or appreciate or admire about somebody. 100% of people will not say yes, but some percentage of people will resonate with what you said. And that will be.
You talk about rhythm, alignment, and energy as core parts of leadership. What do most CEOs get wrong about managing themselves?
Yeah. So the alignment is important because, we usually think of alignment in terms of like business alignment, marketing plan this, and then engineering launched something, and then, something else was recorded, finance team, like how the business fits together and the things we're going to do and when we're going to do them. That has to also like work in how you configure your life. And I've noticed companies have a certain rhythm, and then people have a certain like rhythm in their lives when things are going well. And it's because you're living in a way that's consistent with your values. If you're not, then there's a invisible struggle and an unspoken struggle in your company and with you, and the relationships in your life, if they're either broken or they are struggling in some way, and you're not allocating your time and energy in a way that frankly you deserve and others deserve better from you. And so that's what it looks like to really have a purposeful, intentional and aligned life, because there are otherwise things that are going to be, interfere with your performance. That is the gap between your potential and where you are right now.
Yeah, I want to say if you have internal conflict, you can't be clear and intentional when leading people because your brain's not clear to start with, right?
Yeah. And that's where once you have that clarity, once you have that rhythm, then you feel good. Then the confidence just shines when I see it in people who have found that rhythm. It's not easy, and it's unreasonable for people to think they can do it by themselves. And that's why your relationships matter a lot. Your life partner, the coach, therapist, the advisors and mentors, and people who are adding so much value to your life have to play an important role in that too.
And for earlier or For founders at earlier stages of their career, I feel like these components are often overlooked because there's so much in a rush to just build, deliver, get bigger, get traction, gain distribution, that even if they haven't resolved some of their internal conflict or have issues in their life, they try to kind of push that out and double down on the business. But the thing
Yes.
is, the boat will start leaking at some point because the leader, the captain of the ship, has internal drama. So at some point, it's going to break out and it's going to negatively impact the crew.
Well said.
So when a founder comes to you overwhelmed, where do you begin?
I usually ask them to tell me about what their week looks like. And we actually look at their calendar. And I think that often presents a lot of clues. And then there's usually some things that present certain like triggers for this feeling of overwhelm. The other thing is I ask them what they should stop doing. And in order to create space for the good things in their life, to allow them to apply their energy in places where they feel like I need to do this, but I'm not doing it right now. And sometimes, that starts with a simple question, like, if I give you a 25th hour in the day, what would you use it for? Because, there's usually something missing, and that could be sleep, that could be exercise, that could be eating right. That could be, that they haven't planned much for the future, or they haven't taken care of something in the business or in their own lives that they need to. And, it's not the job of your board member or your VC to know that. Your co-founder is dealing with their own stuff. Only you can do this for yourself. And for a younger founder, and some older founders too, right? They believe, I can handle this. I can sweep this under the rug. I can just like put this aside and just like do work. When you have to work on yourself as well. And that is so important because particularly at the early stages, you are the single largest point of failure in the company. You talked about the captain of the ship. Yeah, you're like, it's not like any other individual, but you. So of course you have to do what you can to be at that highest level of performance and create the right rhythm for yourself and for the business.
Yeah, and without the right habits, like you could maybe win the sprint, but I don't see you winning the marathon. It's almost impossible the more I think about it, because at some point you just won't be able to compete. It'll wear you down. And that's why I think having good habits becomes so crucial to that alignment, to that rhythm, to that flow, to that good leadership. I want to ask you, Vijay, what's something you had to unlearn in your own founder journey before becoming a coach?
We alluded to this before, but I think important is that people value very different things. And so if I'm working with a coachee or a coaching client, what's important is to understand their values and what they're really trying to accomplish. I have founders who want to one day be in the pantheon of startup or business leaders and be a household name. And I have other clients who are really trying to create what feels like a great life for them and their families. And I don't think of any of them as better or worse or more worthy or more ambitious or whatever, because all of that is hard. And the question is that what matters to you? And do you, and have we unpacked that properly? I think that is like one of the things that I've had to unlearn is, people's like values are so different, and to work on with a shared understanding of success together, because you, the founder, are the deliverable. It's not a PowerPoint report that says your business needs to do this in the next, 6 months. It is instead like a better you that allows you to be the best version of yourself.
I want to move on to the lightning round. One question every founder should ask their investor, but usually doesn't.
How can you help us beyond just providing capital?
Most underrated fundraising skill?
The ability to listen and not just pitch at the investor based on a dialogue and their feedback.
One common GTM mistake you still see too often?
failing to align the GTM strategy with the overall like business model and investor expectations for the next level of funding for the business.
Book, mindset, or habit you most often recommend to the founders you coach?
A book is Never Split the Difference by Chris Voss. It's extremely useful and practical for anyone, not just for founders. And actually, if I can sneak in a second book, it would be How Would You Measure Your Life by Clayton Christensen.
Vijay, that was one of the most grounded and tactical conversations we've had. Practical insights for any founder who's scaling themselves as they scale their company. For anyone navigating a raise, feeling stuck, or simply trying to lead more effectively, go check out the funding framework and learn more about Vijay's work at mystartupsystem.com. If this episode helped you, send it to a founder you respect, and I'll see you in the next one.
Tech founders and VCs, careers, lessons, GTM.